Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 19th of September. All right, as we come into Wednesday's trading now, this is where we start to get some real tangible economic numbers coming out. So to me, the start of the week has been a little bit discombobulated, totally with the majors here now. After yesterday's announcement of trade tariffs from the US, okay, we saw the currencies, Aussie and Kiwi, sort of dip lower. There's a little bit of dip down in the in euro as well, pretty short-lived. Sterling continues to charge higher. It's the one currency pair that is bucking the dollar. Overall, at the end of the 24 hours, dollar CAD ended up a bit lower, and dollar yen ended up a bit higher. So the dollar is going all over the place. And this is primarily, we saw at the end of the day, China have come out and said they would retaliate. They have come through and followed through with 60 billion of tariffs on the US, sort of, a fraction of what the US are doing to them. But you are seeing, what we're seeing is a discombobulation of all these prices, okay? Now, sterling, regardless, Brexit, positive Brexit news. UK PM May is very positive about getting the EU to come around to a decent deal. I think they need to be doing that. Dollar CAD, well, NAFTA is still hanging in the balance. And dollar yen, okay, you would think with China coming out and throwing a few tariffs on the US and sort of increasing a bit of negative talk, that dollar yen would be lower, but it's not, right? It seems to me like everyone's getting caught up with the media and listening to the various media outlets, right? Don't get confused. The media are selling advertising. They're not here to guide you into your trading, okay? It's very biased. It's all about selling stuff and promoting that fear. So you come back to the US dollar, okay, and the dollar yuan. I mean, these are the two pairs that you need to sort of really get a grasp of. Now, you look at the dollar index, okay, it's basically done hardly anything, right? And you look at the major currency pairs, and they're all over the place. So what's going on? Well, a bit of discombobulation across all the majors, okay? And this is what various geopolitical events do. They actually create disharmony. The natural flow of the major currency pairs is distorted. And that's what you see. So when you have the US dollar index up, you can actually see what's going on. And you go, well, the US dollar is hardly doing anything. What we did see is this is the puppy here that's causing a lot of the problems, or a lot of the movement, I should say, not the problems. Dollar yuan, right? Now, we saw dollar yuan go through the roof yesterday on the Trump announcement of new tariffs. Now, they were forecast a week out, right? There was still the immediate euphoria around that. And then as the day went on, okay, dollar yuan just sort of dropped down another couple of hundred points or 300 points. And then even with the Chinese coming out and saying they're going to put some tariffs on US products, it actually appreciated further. It's like, yeah, this is a good thing. So to me, this is an escalation of trade wars, which doesn't match the picture of what's happening on the currencies at this point. Now, equity markets, they're up, okay? Another sort of slightly confusing event. It's like almost the markets have brushed the various events here with, looking at, the equity markets versus the safe haven and the trade wars. It's like they can't even see it. But to me, this is going to get a little bit nastier, especially when the trade tariffs start to impact Chinese numbers. So don't fall in love with what is going on the media front. And if I just come back across here to give you a bit of a look at what's going through here, it's still the same geopolitical situations impacting or overshadowing the markets. Okay, China today, this is just a different story, different day. Who's putting the tariffs on? Well, China have put some tariffs on. Yeah, that's great. Now, I would expect Trump to come back and basically trump them and actually put more tariffs on them. That's the whole thing. But this is the one thing that doesn't make sense. Dollar climbs versus yen as investors shrug off trade war jitters. That's a load of crap. Okay, they're just trying to make a story to fit the picture. Okay, to me, dollar yen has got to come off. The US dollar still hangs in the balance. The US dollar has gone nowhere. All that's moving around is the yuan, right? And that's impacting the Aussie and Kiwi, slightly impacting euro, but euro is sort of moving a bit more with sterling, which is moving to the top side. Dollar yen, I think this move to the top side in dollar yen is basically the market buying back their shorts because they thought it would dollar yen would come off with the increase in trade tensions, but that hasn't happened. Dollar CAD washing around. NAFTA is still the big uncertainty there. China's wound down as Beijing, Washington escalate trade row. yeah, that was a very short-lived story because as we can see, the yuan went through the roof, 400 points. So that's just another load of rubbish. Now, what we do have is sterling is at 6 weeks high is coming into. There's 3 weekends of EU summits. I would suspect we're going to get a deal here out of the EU and sterling. It's going to be very positive for sterling, and this is where you really need to focus in on what's going through in the market. So if I just get up the MyFX Trading Hub, right? You're going to sort of assess what's going on. Now, geopolitical events are overshadowing the market. Now, don't fall in love with these. And I saw a lot of our traders yesterday saying, oh, I'm going to hold this position. You know, when the Trump decision came out, the short Aussie, short Kiwi, long, some of the other currency pairs, and they're sort of saying, well, I'm going to stay in the position at least for, 24 hours. This is going to be huge. I'm like, well, it's a geopolitical event. These things can turn on a knife edge, and this is coming out of China. Wait for them to say something. This is already sort of, if anything, factored in the market. So when these geopolitical events are in the market, they will not create the trend. They are short-term gyrations. The trends come from central banks, so don't fall in love with positions. Doesn't mean you can't get 100 points out of a currency, but this thing could flop about. Now, what have we got? Upcoming events. UK CPI is the only thing on the radar today. Now, this is a really good thing because it gives us specific focus and it gives all traders and all banks focus. Everyone will be looking for some cash. Now, I've been speaking to a lot of my mates in the banks. They have been getting hacked up on all these gyrations. So a lot of them are sitting out waiting for key events. So UK CPI, massive opportunity. Now, if I take it a step further, just to give you a bit of a look here, now we've got a pending order set up here for sterling. And this comes back to having a look, and I'll just give you a bit of a look at the sterling daily analysis summary. Okay, we've got a situation where we've had the Bank of England meeting. Yeah, they're talking, if inflation's high, they're going to have to raise interest rates. The technical outlook, well, it's up as well. We just need the last piece of the puzzle, the economic data, to fit into play, and this thing will really run to the top side. Okay, so when you come down here, weekly charts are starting to trade sideways, daily and hourly charts are pointing up. That's a really strong situation to be in. So when you come back to sterling, right, I'm thinking, well, you know what? If inflation is definitely, this is like a no-brainer. If inflation's above 2.6%, the forecast is 2.4%, I would expect sterling to rally 100 points plus. I was going to say 150. That's where my order's set. And there's no levels here. If you look at this chart, right, there's, all we've got is a big round number, 132, the figure. If it breaks above that, we are going to see a significant move, especially with all the news, current news, all around Brexit, okay, being positive, I should say. So when you come back to looking at the overall picture here, now we've had a couple of slight changes as well. Like Euro was into a bit of a bullish mode. It's just gyrating sideways. Sterling is bullish. Aussie's gone into a sideways movement as well. And that can be clearly seen. If I just come back over to sterling, give you a look here. We've got a bit of an oddball situation. The RBA yesterday came out and were slightly hawkish, saying that interest rates would possibly be going up. That's the next move. At the moment, it's okay, but the next move will be up. That's hawkish. The economic data is quite neutral. The technical outlook is still down, okay, but it is almost, the dailies are almost turning to sideways as well. So if that goes sideways, then the whole technical picture for the Aussie becomes pretty neutral. And then all we have is pretty much a potential move for a move to the top side. Dollar CAD, as you can see, this is very typical of geopolitical situations where you have central bank, economic data, and technical outlook all different. And that's why we have these markets that are just chopping about sideways. All right, so the devil is in the detail. Okay, you need to know what you're looking at. So when you come back to today's opportunities, it's like lining up the fundamental opportunity with the best potential pair which has some sort of bias. And luckily for us, sterling already has a positive bias, a bullish bias. And that's where those UK CPI numbers really come back into play. I think it's a huge opportunity to, wait it out, let some of these, the US and China bash themselves to bits, and then really start to focus in on the real major opportunities. As I said, just look at sterling here. A lot of this down move, okay, that we've seen over the last couple of months, okay, has all been around Brexit. okay, around a negative deal out of Brexit. Now we're starting to see this unwind as well at the same time as some of the UK fundamentals coming in strong. So I can see this thing up around 133, no problems. If we get high inflation today, well, then the Bank of England will have no question except for raising interest rates next month. And that's where the focus is. That's the real opportunity. Now, it's a bit of a stretch, 2.6%. It's pretty high numbers. But last month was 2.5, or last month. So they are factoring in a 2.4%. If I just come back over the numbers, this is where you want to really focus in on. And don't get too caught up in the media around China and the US at this point. That sounds like an absolute shit fight. These are the numbers that we're focusing in on. 2.4%. That's the key one for the annual number. But you want both of these numbers. They should come in line if they are both strong or weak. Weaker numbers, unfortunately for us, will defuse the situation and we'll be back on the back foot. I wouldn't be looking to get short because the general momentum for sterling is up. So the only opportunity here, to me, the best opportunity is strong numbers and you are buying sterling. Well, that's what I'll be doing anyway. So that's where I see the picture here. So once again, just to reiterate, if you have a look at these currencies, they're washing around, okay? I do the analysis each day. So, for instance, on these data analysis summary pages, what a lot of you see, because you haven't got the full access, is you see the bullish, bearish, sideways situation. But what I'm seeing on the when I am doing the analysis is all I'm changing generally is the hourly chart. There's no general overall change in sentiment across a lot of these pairs. But what we are hearing is a lot of noise out of the media and a lot of hype. And as I said, the situation here with some of these pairs does not match up with what's going on globally. Now, to me, there has been an increase of tension between the US and China. Dollar yen should be moving lower. I think that this is a market positioning situation. The yuan has gone through the roof. I think that's the Central Bank of China pushing it down. Aussie, to me, should be lower, but it's not. Same for sterling, same for Kiwi. But look at euro, it's just trading sideways. And with Brexit going on, sterling has just got eyes upwards, and that's pretty much it. And dollar CAD, I mean, it's just gyrating all over the place. At the moment, it's starting to drift down. Okay, is that going to last? Mate, throw a coin in the air and toss, see where it lands, heads or tails. But to me, it's a bit of a guess. So that's where we are with the major pairs, guys. As in, I've said the last couple of days, make sure you do keep an eye. If you are going to waste some time in front of the screens, and I would encourage you not to, keep an eye on dollar yuan. Now, this is just, as you can see these moves here, one day down, a couple of days later, it's up, then down, then up, then down. This is not really going anywhere at this point. Overall, the yuan should weaken as the US trade tariffs impact their economic data. You want to keep a close eye on that. Keep an eye on the equity markets. We do have some Japanese numbers coming out in a few minutes. Now, these aren't big, the trade balance numbers, so don't get too caught up in that. You're really watching the yuan for direction during that Asia session. And then, as I said, you come into the European session, it's all about UK CPI. All right, guys, that's it from me. For those looking to trade during that Asia session, I was just actually going to show you where those correlations are with the yuan. Okay, so when you're looking at what things to trade, well, Aussie and Kiwi, Aussies are back at 72%. Don't forget, it was at 80% about a week or two ago. Kiwi's up to sort of almost 70%. Gold, 82%. Right, that's almost the instrument to be trading with the yuan. It has the highest correlation. It's obviously a negative correlation because of the way it's quoted, but they're the pairs that you want to focus on if you are looking at the yuan during the Asian session. All right, and that's pretty much where we are, guys. It's another day. I think there's a lot of noise involved during the around the yuan. I'll be looking at the UK CPI numbers for a potential trading opportunity there. All right, guys. Well, that's it from me. Have a good trade day. I'll see you in the trade zone. And, just manage your risk. The last thing is don't fall in love with your positions. There's a lot of geopolitical events pushing things around. Brexit, NAFTA, the US Sino, whichever way you want to call it, the US-China issues. So there's a lot of events to go on. And the trading opportunities at this stage are short-term, intraday, right? Not 5 minutes, but you're not thinking, well, I'm going to hold this position for a day or 2 days because the currencies will turn around and bite you, right? All right, guys, have a good one. We'll see you in the trade zone. Cheerio.